Welcome back, D-Traders. A fresh review of the New York trade is on tap. Yesterday, Wall Street perked up in the light of the U.S. retail sales data. Key stock indexes got a second wind amid the upbeat data. And today, the stock market is again overwhelmed by pessimism. The New York pre-market suggests another sell-off. On Tuesday, Wall Street major indexes closed with notable gains. The Dow Jones closed 1.3% up, the Nasdaq jumped 2.8%, and the S&P 500 grew 2% to close at 4,089 points. Today, optimism is ebbing away, and the top indexes are trading in the red, with a 0.5 and 1.2% losses. Analysts warn of another sell-off, so the S&P 500 is expected to decline back to 4,000. Its corridor for today is defined between 3,980 and 4,060 points. The stock market revived yesterday on the back of news on China's progress in the fight against COVID and on strong retail sales. It means that demand in the US remains beyond despite high inflation. So, a recession is not around the corner as investors fear. Thus, investors rush to buy stocks of high-tech giants as they fell in the recent weeks. Stock of Apple, Microsoft, Tesla, Amazon and Meta rebounded 1 or 5%, thus driving the S&P 500 and the Nasdaq up. Yesterday, the best performers were stocks of United Airlines, Coinbase and Paramount. Traders welcomed positive news, neglecting the rock-solid hawkish rhetoric of Jerome Powell. Today, Wall Street is focused on a tough reality. The global economy is sending signs of a looming recession. Japan reported that its GDP contracted in the first quarter. China reported that new home prices fell in April, and the UK published the highest inflation reading since the 1980s. The CPI skyrocketed to 9% on a year in April, and Jerome Powell is determined to stem inflation, so investors are stoking fears about further inflation acceleration, recession, and risks. Traders reckon that there is an 85% chance of a rate hike by half a percentage point in June. Amid the doom and gloom in the global economy, investors need stronger positive news for a rally in the stock market. The bullish day for the stock market brought losses to the US dollar. On Tuesday, its index suffered the sharpest intraday fall in the last 2 months. The index dropped 0.9%. Today, it rebounded to 103.50 with a bullish outlook. The index is expected to trade in the corridor between 103.20 and 104 today. The US currency owes its resilience to mounting fears about the global recession and to Jerome Powell. Yesterday, the Fed's leader confirmed the hawkish rhetoric aiming to deal with the soaring inflation. He said that the regulator should have increased interest rates earlier. The Fed is focused on pushing inflation down to the target level of 2%. And the chairman reminded the market about the Fed tightening at a faster pace until their goal is achieved. Thus, the US dollar got a second wind. The long-term outlook remains clearly bullish. The USD CAD pair traded flat yesterday. Today, it's unwilling to move away from 1.2830. Amid higher volatility, the intraday corridor for the day is seen between 1.2810 and 1.2870. In the context of negative economic data from advanced global economies, in particular the dismal UK inflation data, investors welcomed Canadian stats. Canadian inflation remains at high levels, though it's easing its pace. Canada's CPI grew to 5.7% in annual terms in April from 5.5% in March. It's the record high score, stronger than the expected 5.2% increase. Nevertheless, inflation is slowing down month by month. The CPI eased its pace growth to 0.7% in April from 1% growth a month ago. Economists had expected a climb of 0.4%. The crypto market is trading lower in parallel to the stock market. Bitcoin is known for its correlation with the Nasdaq and the inverse correlation with the US dollar index. On Tuesday, the crypto managed to recover to $30,600 And today the price resumed its overall downtrend. The digital token is weighed down by global risk aversion and the recent slump of stablecoins. Analysts suppose that if the crypto declines to 28,100, the door will be open towards lower levels, at least to $25,400. They do not rule out a deeper fall to 18,000 in the medium term. Its intraday corridor is defined between $28,500 and $30,000. All in all, pessimism is again setting the tone on Wall Street. Keep close tabs on financial markets on InstaForex TV channel and see you tomorrow.